This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, January 26, 2015. So the euro is extended to yet another 11-year low, trading down to 10.95 on Monday ahead of this latest minor bounce. But there is risk now growing for a short-term corrective rally, with the daily, weekly, and monthly charts now grossly oversold and in need of some form of a correction. Still, the overall downtrend remains firmly intact, and only back above the 50-day moving average would compromise the bearish outlook. Look for a previous support now turn resistance in the 1460 area to act as a formidable cap in favor of the fresh lower top and bearish resumption. Sterling dollar. Cable has recently broken down to fresh 18-month lows below 50.35, exposing the 2013 base at 148.13 lower down. But the market is attempting to recover a little bit and could see a bit of upside before resuming the downtrend. Ultimately, only back above 52.70, recent consolidation high, would compromise the immediate bearish outlook. Dollar yen. Dollar yen continues to chop around, consolidating recent gains, and it remains locked with an intense longer-term uptrend. Ultimately, only back below the 115.55 low that we saw on the 16th of December would compromise the bullish outlook, while a break above 121.85 is required for bullish continuation and to expose 125 further up. Euro Swiss. Euro Swiss continues with its consolidation following the collapse from the other week, with the market now trading between 97.10 and 106, and clearly a break on either end will be required for the next key directional bias. Aussie dollar. Aussie dollar has extended its declines to fresh multi-year lows after breaking down below psychological barriers at 80, and the measured move objective at 77 is in sight. A lower top at 82.95 is also in place, and only back above this level would compromise the immediate downtrend. Dollar CAD. Dollar CAD remains locked with an intense bullish uptrend, with the market breaking out to fresh multi-year highs towards 125, but with daily studies now severely overextended, there is a risk over the coming sessions for a pullback. At the same time, any setback should be very well supported into the 10-day moving average, while only a close back below would compromise the bullish outlook. Kiwi dollar. Kiwi dollar has recently broken down to fresh multi-year lows after taking out the 2014 low at 76.09, and the market is now focused on a test of a measured move objective at 72. Ultimately, only back above the 80.35 area would compromise the overall bearish outlook, while any rally should be very well capped into previous support now turn resistance around 76.10. S&P 500. The SPX 500 is looking like it wants to carve out a major top, with any rally stalling out ahead of 2070 in recent sessions, but a break below 1968 would be required to confirm topping and accelerate declines back towards the October base at 1820. Gold. Gold looks like it's attempting to establish a major base, with the market recently breaking out above 1256 and now exposing a retest of the key 1345 high from July of 2014. Ultimately, any setbacks are expected to be very well supported, with only a break back below the recent lows that we saw at 1270 to the recent weekly lows that we saw at 1217 to compromise the bullish outlook. That's all for today.